Hello and welcome to the HI Bull Bear Market Report for June 18th of 18. My name is Adam Straseske, and here are some important disclosures in our agenda for today. So we always start at the very top of the market, bull or bear market territory, and then we get into the momentum, a little bit of correction risk coming into this week, and then finally the S&P 500 price action. Of course, our operating plans as well, indexes we like and don't, and so forth. So here we are as far as the barometer, bull market, bulls are in charge. We're looking at a lot of different trends in here, and then also some economic indicators. Most of them are measured on a monthly basis, some of them on a weekly, but overall looks good for the bulls right here as far as the longer term price action. We're definitely in a bull market. 12-month momentum looks good for the S&P 500, just really starting to outpace a pretty good amount the MSCI All World ex-USA Index, and then of course we've got Treasuries down here. So as long as these two lines are above the Treasuries, really looks good for the bulls according to 12-month momentum. And one more note, this is why we're focusing on the U.S. equity markets rather than international, simply because it is outpacing it. Correction risk, looks okay for the bears coming in here. For correction risk, we've got a negative divergence right here, and I've outlined another one that we had back. It looks like in middle of March we had a negative divergence, and then there was a down move in price. We're right at resistance. You can see resistance right here at the 2800 level. Market tested there, failed, tested, and failed, and now we are testing it again. So we'll see if the bulls can break through to the upside. I'd say it's probably closer to a neutral as far as a correction risk. I mean, just a bunch of sideways price action right here, but the bulls really want to see a break to the upside. If they can get that break, it could be the beginning of another bull leg. But right now, it looks like we are coming into the tail end of a bull leg, and so we want to see some positive action here pretty quick. The longer it goes sideways like this, the more credence there is to the bear case. And here's a look at it on a weekly chart. You can see it failed right here, and now we're right back there again. So we've got this broad channel that we're in, this neutral channel. Last week, S&P 500 up 0.02%. So we got to give the advantage to the bulls right now, but each time we add one of these bars in here and it doesn't break to the upside, it gives more of a 50-50 shot of each way. But more than likely, probably right now, we'll see if price can break to the upside, but the advantage is to the bulls at this time. And here's our operating plan. We still like preferreds, U.S. small caps, and U.S. growth. And then here's our weekly swing. Sold out of Japan this past week, and we got into transportation. U.S. small cap up 0.09%. U.S. growth was up a little bit more than that. But looks good for both of them. You see nice bull leg right here. Broke to the upside, hasn't turned down. If it does turn to the downside, we will want to see it hold this level right here. And looks like U.S. growth is following suit. So it looks good for both of those. U.S. Treasuries up 0.33% for the week. They're just holding on. They're holding on at support, and we'll see if they can, in fact, turn this bear trend around. Australia down 1.45%. We're in a what could be it is definitely a bear channel, but it could be a bull flag, a larger bull flag. So we'll see if it can turn around. Not really excited about Australia, but we're going to hold on to it and see what happens. The EAFE value, MSCI EAFE value index, down 1% for the week. All internationals look pretty, I don't want to say all, many international indexes look pretty weak, and this is just another example of one. We have a second purchase range in here, but frankly, I don't know if we want to take on that additional risk in something like this when we can get into something that's clearly trending up and looks a lot healthier as far as the trend goes. And here's an example of one of those right now. Healthcare, you can see, again, healthcare, we're coming into resistance right here, but nice that we had a bull bar close close to the high for the week. We've got a second purchase range down in here and an original stop down here. So looks good for healthcare, and we'll see if it can continue. Up 0.85% for the week. And here's our newest addition, transportation, for a weekly swing. We've got this little bit stronger than healthcare. And nice bar. Would have liked it if it would have closed on the high for the week, but I'll take it. And if it does in fact come down, we've got a second purchase range down in here that we'll consider. But it looks good. So we really need this stuff to break to the upside. Frankly, kind of don't like how it's taking so long to get to the upside. Whereas you saw, like, for example, back in here, we had a run up a price and then a run down, and see how quickly it ran up. That's really what we're looking for, not this this really slow grinding, which could go on for a while. But like to see a whole lot more bull bars, and a lot bigger bull bars would be the ideal case for the bulls. As far as operating plans, still keep with the same positions. The monthly trender, no changes there. And then, for the weekly swing, didn't see. There are a few indexes that we got a buy signal, but they're in a bear trend, and so we're going to ignore those. We're just going to hold on to the positions that we got right now and see if next week we get some stronger buy signals. And with that, have a great week, and we'll talk to you next time.